Vanguard is one of the largest and most popular investment management companies, and they've been making some predictions about the stock market in the upcoming years that, quite frankly, doesn't look good. Vanguard are a company that definitely try to promote long-term investing. They offer low-cost passive index funds and ETFs that definitely attract the more long-term hands-off type of investor. They don't have a mobile app, again encouraging the type of investing where you set it and forget it. And they've even said themselves, "We advocate a strategic approach to investing and we encourage investors to take a long-term perspective." So they're all about riding out those short-term fluctuations, getting the highs, getting the lows, but over the long term, letting the highs outweigh the lows. But Vanguard have just released their 10-year forecasts revealing their true views on major asset classes. And I don't think it's necessarily what people want to hear. But even if these are true, there are some silver linings, and we're going to discuss those as well. The first prediction that they've made is that US stocks will only increase between 4.7 and 6.7% each year over the next 10 years. 6.7 tops. That's what they're saying. We're used to seeing the S&P 500 return around 9 to 10% annualized. But remember, this 9 to 10% that we're used to hearing is an average taken over a very long period of time. The reality here is you don't actually get 9 or 10% each year. Looking at the historical performance data from the S&P 500, you can see that some years you're up by nearly 27%, other years you're down by just over 6%, so it really does vary. So let's just take a midpoint. Let's say that Vanguard are predicting a 5.7% increase every year for 10 years. That works out as a total increase of 57% over 10 years, which is not great. You see stocks doing that in 1 year, but it's also not unheard of. The market naturally goes through cycles. It has periods of time with high growth and then slower growth, and it's reactive of the macroeconomic environment. You can pick points from the US economy's history and find similar things. Let's just look at the performance between August 2007 and August 2017. You can see during this time period, the S&P only returned about 68%. And then if you look at the time period between May 2000 and May 2010, you can actually see that there was negative return. The starting point was higher than the end point in this time period. But then if you look at February 2009 to February 2009, you can see a very different return picture. Look at this. You can see that it's up by 240%. The point is, the market fluctuates, and that is why you need a long-term mindset. Vanguard are basically saying that a recession is going to happen in 2023 and the market will reflect that. They believe that interest rates will continue to hike in order to combat inflation. We already know this. We can look at recessions in the past and we can see how the S&P 500 performed during that time. Let's look at the Great Recession, which happened between December 07 and June 09. You can see a steep fall during this time. We know that typically the returns of the S&P 500 are negative during the first few months of a recession especially. But we also know that some stocks will actually do quite well during a recession. These are normally the defensive essential stocks. And in terms of what Vanguard are expecting for the market in just 2023, well, they're expecting a marginal growth of 0.25%. The next thing that they're predicting is that value stocks will outperform growth stocks. I do feel like in recessionary times, we would expect those value defensive stocks to thrive. Whereas in bull markets, we typically would expect the growth stocks to do better. They have said that the US growth stocks, so think of Apple, Tesla, and Amazon, will only be returning 3.1 to 5.1% each year over the next 10-year period, which is definitely not what any of us are used to seeing from these types of stocks. They also went on to say that those small cap stocks, which we typically view as more risky but with a higher chance of a larger upside, will only return between 5 to 7%. The third prediction that they made is that they believe international stocks will outperform US stocks. They made a very big statement here. They said that they think international stocks will outperform US stocks by 40%. And again, that is a very different picture than what we're used to seeing. They also mentioned that they believe emerging market stocks will outperform US stocks, a kind of warning to the investors that are heavily weighted in the US. The The last prediction that they made is around bonds. They have said that they think bonds will outperform growth stocks, expecting aggregate US bond ETFs to return between 4.1% and 5.1% annually. But they also did mention that this could increase up to 7.6% when you look at high yield bonds and emerging market bonds. They've said, we expect bond investors with a long-term horizon to be wealthier by the end of the decade, compared with our forecasts just 12 months ago. So now looking at the UK specifically and what Vanguard have had to say. They pointed out that the UK narrowly avoided a recession in 2022, but they do believe that the United Kingdom will go into a long, deep recession in 2023. They said that the energy price soar was the biggest stress in 2022, but moving into 2023, they think that's going to change slightly, and they believe that the new stress will be the hike in mortgage rates. And they've predicted that the Bank of England will continue rising interest rates. So all of this sounds very doom and gloom, but I've said it time and time again. This is the time that opportunity will be presented to those that want to take it and can keep their emotions in check and retain a long-term mindset. I had to learn this the hard way in 2020 when I was new to investing and I decided to stop investing when the stock market began to crash. And looking back, I missed out on loads of opportunities, and I don't want to do that again. Vanguard have said it themselves. Near-term pain is still possible, but long-term gain is now more likely. We've seen it happen before, where the market doesn't do well and it takes months or even years and decades for it to fully recover. But it will recover eventually. And remember, these are just some predictions from Vanguard, which is of course not the only source of truth. They're too not able to fully predict the market. So make your own judgments here. If you want to take a look at joining my Patreon, I'll leave it in the description below. And if you want one of these very funky t-shirts that will remind you in hard times to eat, sleep, invest, and repeat, again, they come in 6 colors and they'll be in the description too. Thank you so much for watching. I'll see you in the next one.